What's going on, everybody, and welcome to the video. In this one, I want to talk to you about another stock that has a huge short squeeze potential. It's at the lowest price that the stock has ever been, with an insane short ratio, short interest, short days to cover. So we've got a lot to look at in this video. So if you do enjoy this type of content, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. But let's go ahead and get straight into it. So the stock, as you can see, that we're looking at today is going to be Upstart, ticker UPST, trades for $13.20. You know, on the RSI, it's incredibly low at 24.35. So very, very oversold. I mean, the stock just 2 weeks ago was at 1876 instead of 1320. So we're seeing a lot of downward momentum. So let's go ahead and show you a few key things about this company that I think are pretty important to know. So I'm not trying to bash on this company. You know, if you're invested in it for the long term, it could be turnaround. You know, it could have, it's a good company. You know, they do incredible things, but it just might not be the right time to be locking in on this company. You know, it's a big risk, especially with just a massive downtrend and the way that its financials are looking right now. And I'm just not trying to bash on the company. I'm just trying to point out reasons for a short squeeze, you know. So let's go ahead and talk about that. The short float is about 35.48 with a short ratio of 4.44. Institutions and insiders are both selling, which is a negative sign. Earnings per share and sales have both been down pretty big amounts over the past year and quarter over quarter. Has a forward P of 107, which is very, very high. You know, kind of shows that this company's almost even overvalued at its current price, which is very interesting. And then, you know, analysts are not liking the stock too much. There's a ton of downgrades coming. You know, everybody's saying neutral to underweight or sell, underperform. You know, people aren't really liking the stock. To furthermore show you more about the interest on shorts, short interest ratio, 7.71 days to cover. We just look a little bit more, you know, not too many shares available to short right now, which is 85,000. We saw the company's float right now is about 69.99 million. So definitely a small amount of shares, which does just cause more demand for shorts and potentially lead into a short squeeze. So we're seeing a lot of catalysts kind of pointing towards a potential squeeze in the stock. Now, another thing that I did want to point out was it had a PE, a trailing 12 months PE, about $12.82. So that is pretty interesting. You know, it had a really good 2021 and it's had a very poor 2022. I'll go ahead and show you some financials real quick. I mean, net income recently has just been incredibly negative. Revenue has been decreasing as well. So it's not necessarily the best thing you want to see. I mean, if we just go ahead and look at their annual things look really good, you know, from 2019 to 2020 to 2021. Very good stuff. I mean, look at these year-over-year changes. But now the company is taking a pretty big fall. So let me go ahead and show you who really Upstart is if you don't necessarily know. Our mission is to enable effortless credit based on true risk. So they have a ton of good things going for them about them. Upstart is a leading AI lending marketplace designed to improve access to affordable credit while reducing the risk and cost of lending for our bank partners. So what they do is they kind of allow people, you know, your everyday person, to get loans even if they do have poor credit per se. But they make it affordable. You know, you don't have to pay incredibly high interest rates just because your credit score is not terrible. You know, with their AI, they're able to manage this risk and things like that. 75% of their loans are currently fully automated, which is pretty good. And this is a company that I really like, you know. Just based on the company and not looking at the financials or anything like that, I like what this company is doing, you know. I think it's a good company. Let's go ahead and show you their key highlights from their third quarter of 2022. Revenue was $157 million, down 31% year over year. Net income was down from 28.6 million to negative 58.1 million. And then net income was 56.2 million down from 29.1 million. And EBITDA was negative 14.4 million, down from a positive 59.1 million. So these numbers, as you can tell, are just not too pretty. You know, this is a $1 billion company making pretty big losses. You know, just these charts, you don't necessarily want to see that. You don't want to see a downtrend. You want to see uptrends, especially in a company that is supposed to be a growth stock such as Upstart, you know. Being semi-new to the market, I mean, they were founded in 2012, but they IPO'd not too long ago. They IPO'd in 2020, or not in 2020, and they IPO'd in 2020. Yeah, they did. Right here, end of 2020, they have not ever been this low of a price. You can see the stock was riding all the way to the top, you know, from 36 all the way up to almost $400 a share. And then, you know, markets fell, things happen, you know, it's a growth stock. It's a company that's a little bit riskier. And the stock has fallen from $400 a share to $13.20. So, and people are continuing to short, as we saw. The short interest is very, very high. And short days to cover is on, from Fintel, is sitting at literally 7.71. That's very, very high. almost a key indicator of a short squeeze coming soon, but remember there is no guarantees in the market. To furthermore show you a few more things about Upstart, their cash flow is very negative as well over the past 12 months, negative 432 and negative $478 million. That's very negative. And then just looking more into Upstart again, negative 2 cents per share is the current kind of 2022 earnings per share. And then next year, expect to go positive, but sales are expected to decrease from 830 million to 733 million, a negative 11% drop. That's another reason why people might be shorting the stock. And to furthermore show you a little bit, institutions seem to be hating the stock per se just because of the inflow to outflow that we've been seeing recently. I mean, the third quarter and the second quarter, we've seen more buying pressure than selling pressure. But last year, there was a ton of money sold out of this company, and analysts aren't liking the stock. And I'm just saying, just because analysts or institutions don't like the stock means it's a bad buy. But the overall consensus right here is short the stock. People are shorting it, obviously. We can see from these very high short interest ratios. So keep that in mind. I'm not saying that the stock will 100% squeeze. I cannot guarantee anything in the market. Nobody can guarantee you anything in the market. So keep that in mind. But that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future videos. Thank you again, and I will see you at the next video.